If you're trying to run the wheel strategy but find every good stock is too expensive, you're not alone. The good news, you don't need $50,000 to get started. In this video, I'm going to share with you my favorite stocks for January 2026 that are under $30 and work perfectly to sell put options and run the wheel strategy. These are stocks that have strong volume, offer great premiums, and have the potential to provide consistent weekly or monthly income, whether you're a small account or a decent size account. Hi, my name's Gautam, and on this channel, I talk about the stock market and achieving financial freedom with the power of options trading. So if you enjoy this kind of content and would like to see more of it, please be sure to hit the like button, subscribe to my channel, and share this video with anybody who could benefit from it. Also, if you are new to the options world or are simply looking to fast track your learning and avoid costly mistakes, click on the first link in the description below for one-on-one coaching with me or to join my Discord community, The Launchpad. And just a quick disclaimer before we get started that this video is for informational and educational purposes only and should not be considered financial advice. I'm simply showing you my trades and how I trade, and I'm not a licensed financial advisor. With that said, let's jump in and get started. My first pick for this video is Rocket Companies, ticker symbol RKT. And for those not familiar with Rocket Companies is a Detroit-based fintech company focusing on being a full-service home ownership service provider. So their business is broken down into Rocket Mortgage, which is America's largest mortgage lender and known for its digital-first approach. And then they also own a Redfin, which is basically a tech-powered real estate brokerage that helps people buy, sell, and rent their homes. And then they have a Rocket Homes, which is basically connecting clients with agents and providing home search tools. In addition to that, they have a Rocket Money, which includes financial services tools and budgeting. And then they also have a Rocket Loans, which provides personal loans. And then they round it off with Rocket Close, which is basically the closing company for all mortgage service loans. So that's basically in a nutshell what Rocket does. Now, if you look at Rocket's chart for the past 1 year, it's up 102%. And if you look at year to date, which is just about 18 days in the year, I'm recording this on January 18, 2026. So just about 18 days in the year, and Rocket's up 19%. So I like that. And the strong trend has continued so far in 2026. Rocket also got an additional boost from the interest rate cut back in December. And the big news just a few days back, where President Trump ordered government-backed entities, Fannie Mae and Freddie Mac, to purchase $200 billion in mortgage-backed securities to push down borrowing costs, also help lower the 30-year mortgage rates. There was also an additional proposal by the current administration to stop large corporations from buying single-family homes, and that was basically to boost the inventory for single-family home buyers and boost up the real estate sector. If you look at the 6-month chart for Rocket, mostly trading range bound in a $5 to $6 range all the way from September through pretty much the end of December. But on the back of those positive news events, we saw that it actually broke through the resistance and made a high of $24.36. So for those who own Rocket shares, right now would be a great time to sell covered calls. And for those looking to build a new position into Rocket, the first level of support that I like is obviously this $21 level, because this was the original resistance and it has now become support after Rocket broke through the $21 strike price. And also that coincides with the middle of the Bollinger Band, which is this green line right here. So I like the $21 strike price to build a position into Rocket. We can also see that Rocket's currently 72 on the RSI, meaning that it's currently in the overbought territory. And simply that just means that there is a potential for a pullback. So let's pull up the options chain and see what kind of premium we can collect by targeting the $21 strike price. So if I go to the February 13, 2026 options chain and I look at the $21 strike price, this is a delta of 25. Now it's slightly aggressive for my taste. I generally target a delta of 15 to 20 in most cases, but because I see a lot of support at the $21 strike price, I don't mind going a little aggressive. So if I sold one cash secured put at the $21 strike price, right now I could collect the mid price of 64 cents, which is basically $64 because one options contract represents 100 shares. So you would just multiply the 64 cents by 100, and then you would collect $64 by selling one cash secured put at the $21 strike price. And for this, you would have to put up $2,100 in collateral. So again, this is great for a small account, and going with the $21 strike price and collecting $64 in premium is actually a return of 3.14% in just about 26 days. My next pick is SoFi Technologies, and SoFi is actually one of my favorite stocks to trade under $50 and actually for any account size. So keeping that in mind, if you look at SoFi's chart for the past 1 year, it's up 66%, so pretty impressive. But if you look at SoFi's performance since the beginning of 2026, it actually has been pulling back some. Now, SoFi is also scheduled to report earnings on January the 30th in just a couple of weeks. So if SoFi does well with the upcoming earnings, we could potentially see the earnings give a boost to the SoFi stock. Now, if you look at the earnings for the past few quarters, SoFi has consistently performed pretty well with the revenue rising steadily. And also, if you look at the net margins for the past 3 quarters, back in Q1 2025, they had a net margin of 6.86%. They improved it to 8.6%. And with the last earnings report, the net margin jumped up to almost 11%. So slowly and steadily, we see the margins have continued to improve. If you look at the earnings per share, SoFi has consistently beaten analysts' expectations quarter over quarter. So again, if the upcoming earnings come in line with expectations, we could potentially see a boost to the upside. Now, if I pull up SoFi's 6-month chart, we can clearly see that SoFi has been trading range bound for quite some time. Now, this is all the way back in September. We see that SoFi kissed the $31 mark, and then back here in October, it broke that resistance and then just slightly went up to the $32 level. And then again in November, it touched the 32 level, almost getting to $33, but then pulled back down and coming all the way down to the 23.50 area. So now in the last few weeks, the Bollinger Bands have become really tight. And basically, when the Bollinger Bands become really tight, that means that we can expect a move to either direction. Now, looking at the chart and how SoFi has been looking over the past few days, if SoFi breaks this bottom Bollinger Band, we could potentially see it coming down closer to the 200-day moving average, which is this red line right here. And this is around the $22 level. So keeping those strike prices in mind, let's pull up the options chain and see what kind of premium we can collect. So I'm going to go out again 26 days to the February 13th options chain. And if I look at the $22 strike price, this is a delta of 15 and it gives us a 1.88% return on our capital. Now, also let's check out the expected move here. The expected move for February 13, 2026, it's about plus minus $3.7. Now, keep in mind, February 13th would be a couple of weeks after its earnings. So based on that, if I round off this 3.7 to $4 and subtract $4 from the current price, we're looking at a strike price of about $22. So again, the $22 strike price is a delta of 15 and would give you a 1.88% return on your capital. Now the 22 delta was also the 200-day moving average. So that would make a strong support level to pick up SoFi or to build a new position into SoFi. However, if you really like SoFi just like myself and don't mind going a little aggressive, I like the $23 strike price, and the $23 strike price is actually a delta of 21, and this offers us a slightly better return. This is a 2.75% return on our capital. And then if I sell one cash secured put at the $23 strike price, I could collect $61 by putting up $2,300 in collateral. So again, this would work really well for a small account or if you're just getting started selling put options. So let's talk about what happens at expiration. If SoFi continues to trade over the $23 mark by expiration, then this entire premium is for us to keep. And in case SoFi goes below the $23 strike price, then we would still get to keep this premium, but we would get assigned at the $23 level. So if you sold one cash secured put, you would now own 100 shares of SoFi at the $23 strike price. And from there on, you could sell covered calls on SoFi and generate additional income until your shares are called away. My next pick is Lyft, ticker symbol LYFT. And if you look at Lyft's chart for the past 1 year, it's up 37% versus about a 16 to 17% return on the S&P 500 for the past 1 year. So looking good there. Now, if you look at the performance year to date, it's actually down 7%. So Lyft's definitely looking for positive news to boost the stock in the short term. Now, if you look at the latest news, an Israeli committee just approved a law allowing ride-hailing services like Lyft to operate in Israel, aiming at lowering taxi costs, but obviously it still needs full parliamentary approval. And we also have earnings coming up on February the 11th. So hopefully that provides a positive catalyst for Lyft. But what I like about Lyft is that they turned profitable in 2025 and have continued to maintain profitability in the past few quarters. If you see right here, this is Q3 2024 and the net margins negative 0.82%. And then if we look at the next quarter, Q4 2024, the net margin is actually now positive 3.98%. And the revenue going up to 1.5 billion. And then we see again in Q1 2025, they maintain a positive net margin, although a tiny one, but still it's positive. And then in Q2 2025, we see the net margin up to 2.5%. And then in the last earnings report, it continued to be stable at 2.7%. So again, the big story for me is that they continue to be profitable in 2025. And hopefully I like to see that trend continue. Now, another thing I like about Lyft is the free cash flow. If you look at Q3 2024, the cash on hand is about 771 million, while the debt was 1.24 billion. But if you look at the latest earnings report, their debt is now 1.3 billion, but they almost have the same amount of cash to cover that debt. So again, that is a great sign of a company that is growing and building cash flow to support that debt. So again, that's another reason why I like Lyft. If you look at the 6-month chart for Lyft, we also see that Lyft has been trading range bound just like SoFi and Rocket for the past 6 months or so. So we see that it actually made a high of 25.54 here back in November. And then on the downside, it's around $18. So it's been trading in this $24 price point on the upside, and on the downside around $18.84. But we saw that in the past few days, it actually broke this bottom Bollinger Band, and it seems like it's now headed towards a 200-day moving average, which is around the 1750 mark. So let's pull up the option chain. We have the earnings coming in on February the 11th. So if I actually go out to this week, which is the week of February 13, 2026, 26 days out from today, and if you look at the expected move, it's about $3.2. So if I subtract 3.2 from 1836, we're looking at about $15.16. So looking at the options chain, if I went with the $15 strike price, which is a 16 delta, this would actually be in line with the expected move and would actually also be under the 200-day moving average. And this is actually offering a 3.02% return on our capital. So I like the $15 strike price, keeping in line with the expected move, and also a great price to pick up some shares if assigned at the $15 strike price. And for my final pick for this video, I have AMD. I know you're going to say, well, AMD is trading around $230. So exactly how is this suitable for a small account? Because I don't have $23,000 just to sell one cash secured put. So just stay with me and I'm going to show you how. But looking at AMD's performance, AMD is up 92% in the past 1 year. And then year to date, it's up almost 6%. So looking pretty strong. And then we have earnings coming up on February the 3rd. So we'll see how that pans out. If you look at the performance, AMD's been performing pretty well quarter over quarter. Revenue has been rising, and then the net margins have been improving as well. Net margin going from almost 10% to 12.68% with the latest earnings release. And then also if you look at the debt and the free cash, with the last earnings release, they reported debt of 3.87 billion while holding 4.6 million in cash. So AMD is obviously looking pretty strong. So how I plan to trade AMD with a small account is actually using its leverage ETF counterpart, ticker symbol AMDL. Now this is a 2x leverage ETF that tracks the performance of AMD and magnifies it by 2x, whether on the upside or on the downside. So if I pull up the AMDL chart, it's currently at the top of its Bollinger Band. So again, this would be a great time to sell some covered calls if you own any shares of AMDL. But if not, and if you're looking to build a new position, what I like about AMDL is that it tracks the movement of AMD, which is trading around $230, but AMDL only trades for $18. I like the fact that it not only does it provide leverage, but is very cost effective from a small account standpoint. So if you look at some support levels, the first support level I see for AMDL is actually the middle of this Bollinger Band right here. And then the next support level would be closer to the bottom of this Bollinger Band. We see that AMDL came down here once, twice, and thrice. So this is around the 1350 mark. So let's pull up the options chain, and I'm going to go out to again February 13, 2026, which is a couple of weeks after earnings. And then if I see the expected move for AMD at that point, we have about a plus minus 4.7. So if I just round this off to 5 and then subtract the 5 from 18, we're looking at a strike price of $13. Now, if you notice the chart, the bottom of the Bollinger Band was actually around the 1350 mark. So again, the $13 strike price is close to the bottom of the Bollinger Band. So if I pull up the option chain again and get the $13 strike price, this is a delta of 12. So again, extremely safe. There's only a 12% chance of AMDL getting to this strike price by this expiration date. So I like that it's really safe. And if we went with the $13 strike price and sold one cash secured put, you would only require $1,300 in collateral. And for that, you would make $42, basically going out 26 days. And again, this is a 3.38% return on capital. If you don't actually mind staying at the bottom of the Bollinger Band, that was the 1350 mark, and this is a 14 delta. So again, fairly safe at the 14 delta level, and only a 14% chance of AMDL getting to this price point. So if I actually went with the 1350 strike price, I would put up 1315 collateral, and then for this, I would collect $50. This is a 3.85% return, which is absolutely fantastic for 26 days. So I actually like the 1350 strike price. It's at the bottom of the Bollinger Band and has a very safe delta of 14, and at the same time is providing a 3.85% return on our capital. So that's the strike price that I would go and sell cash secured puts to build an entry into AMDL. So that's it for this video. If you enjoyed it or learned anything useful, please be sure to hit the like button, subscribe to my channel, and comment down below with your thoughts or any questions. If you would like one-on-one coaching with me or be part of my Discord community, click on the first link in the description below and I'd love to help you out. I'll see you in the next one.